Hi, this is Matt Bernstein, and rounding out the initial three-part series of stocks I tell my mom to buy. I'm only telling my mom to buy it, not you, because I am not a licensed or certified expert in the financial industry and will not recommend stocks to you. This is just for educational purposes. Please do your due diligence before making any financial decisions. Today, we're going to talk about Verizon. In the previous two lectures, we spoke about Snapchat and Pfizer. But today, right now, we'll focus on Verizon, which is currently at $57 per share. It's a telecommunications company. I think everybody knows who Verizon is. All right. There. Let's start with why I think my mom should invest more in Verizon. They have a 4.22% dividend. They have a market cap of $236 billion and a price to earnings ratio of only 7.5. Healthy PE ratio is 15 to 18. Verizon's a healthy stock, baby, and I'll show you why. Verizon in 2017 had revenue of $130 billion. Holy moly. And a net income and net profits of $30 billion. Is that right? Yeah. Net profit of $30 billion. Their whole market cap is $230 billion. So you can literally just hold Verizon for 8 years and they'll double their market cap just from that because they'll have that money in the bank. I'd like to compare for a minute because Facebook and Verizon, part of how they make money is Verizon sells our data. They know exactly what we're doing on our cell phones, and they own AOL, they own Yahoo. They're a media company. Facebook sells our data for advertisers. Facebook has 2.5 billion users. Verizon also has 2 billion users, and I'll show you why. They own AOL, 174 million monthly users. Flickr, 112 million. Huffington Post, 81 million. Wireless subscribers for Verizon, 105 million users. What, from their family plan, they're making at least $60 per user. They own Yahoo, 1 billion monthly active users. Crazy. So add all those numbers up. I said in April of 2017, I tell my mom to buy Verizon. I also told my mom to buy Ford, which I'm good. I'm good with that. Look at their stock price in 2017. It's pretty much the same, and they offer over 5% dividend. But we're not talking about Ford. I'm not recommending you to buy Ford right now. I'm recommending my mom to buy Verizon. They offer a 4% dividend, and they had a healthy PE ratio of 15 times earnings. Why they have a PE ratio right now of 7 is because they're blowing earnings right out of the water. Verizon's earning, let's see, surpasses Q3 earnings and revenue estimates. Surpasses, boom. Means their PE ratio goes down. It's not as simple as that, but kind of is. So if they had a healthy PE ratio, this in theory would double their stock price. Now I'm not saying that it is, Mom, but I am saying that it's a healthy stock with a 4% dividend. You can't get 4% dividend anywhere right now. And if Facebook makes less money, makes less revenue, makes less profit, and has a market cap of almost double Verizon, and Verizon has similar user numbers, totally different business model. I realize that Verizon also has 100 million phone subscribers, and they collect way more money than Facebook does. That's part of the reason, but they still own Yahoo, which collects ad dollars. They still own AOL, which collects ad dollars. 1.2 billion with that. So they have an audience. So, Mom, please buy Verizon. I'm sure in your lifetime it will double in value and you'll collect that 4% dividend plus all along the way. Thank you so much for listening. Thank you for your attention. I appreciate it. You'll find me more on Quora, on YouTube, on Udemy, on Skillhance, on Skillshare, yada, yada, yada. Patreon. That's a new place. Find me on Patreon. Thank you so much, and look forward to talking with you more. I really love doing this kind of stuff, so tune in. We just made lectures on Snapchat and Pfizer as well. Thank you very much.